These are our house keys. And I can very safely say I do not think we would have purchased a house without your support.
Lenders consider self-employed income to have less certainty, to be a little bit more unstable, rightly or wrongly. I don't make the rules.
As a business owner, I had so much fear and overwhelm and uncertainty, and I was just so sure that we would never be able to buy a property.
So there's a little bit of a myth that with mortgage products, there are employed mortgage products and self-employed mortgage products. That's not the case. We all have access to the same products, subject to meeting lending criteria. So with most lenders, it's going to be an average of your latest 2 years if it's increasing. If your profit has gone down, lenders will look to use the lower figure.
I really wholeheartedly believe that as a business owner, I have so much more security and autonomy over my income than an employed person does. And it really grinds my gears that mortgage advisors, anyone in, credit card companies, whatever, don't trust that as much.
Before you've actually bought your first home, you will be unsure, you will be scared, quite simply because you've never bought a home before. Adding to that, you may have a growing business. You don't necessarily have a fixed income to rely on. Maybe you don't know where your business is going to be over the next 1, 2 or 3 years. There's a lot to consider. It is daunting.
Can't believe in 300 episodes we haven't talked about buying a house as a business owner, and probably part of that is because I thought it wasn't possible. So there we go. It is possible, and people should work with you. That's my final words. Welcome back to the podcast. You're listening to Starting the Conversation. I'm your host, Alice Benham, and this week I'm very excited to be joined by Dan from Dan Does Mortgages, who, as we will delve into within this episode, I have spent a fair amount of time talking to over the last few months. But before we get into that, Dan, welcome to the podcast.
Thank you very much for having me.
Very excited to have you here. I feel like I should just say at the top of this episode, part of the reason that you are here and that we're recording this episode now, and the reason that we've spent many months speaking with each other and you've put up with many a WhatsApp and emergency phone call, is that we have just purchased our house, as I've shared online, and you are our mortgage broker.
It was a pleasure. Well done and congratulations. I know there's a little bit of a refurb going on, but
Yes,
you'll get there.
We had the plasterer in this morning, and I'm not going to lie to you, Dan, our gameness for a renovation is going down as every step of the renovation continues.
Yes, I was going to say it to you today, in these early stages, especially when you're completing a refurb, I've just moved house and done the same thing.
Yeah.
There will be points where you think, why did we bother?
Mm-hmm.
But in a couple of months, it'll all be worth it.
That's what I'm holding on to. And I'm really laughing at my past self, who was like, yeah, within a month, we'll have everything ready to live. And then I'm currently working from a non-plastered living room full of damp. So, all the fun things.
All the fun. And everything can cost a little bit more than it was meant to.
Yes,
but
exactly.
As I say, we'll get there.
We will get there. And hey, that doesn't need to be the focus of today's episode, because it is very exciting, for me at least, that I have bought a property, and you were a huge part in that journey. I feel like you're very humble and you're like, no, it's fine. You'd have figured it out. But I can very safely say I've got them with me as proof. Where are they? Oh gosh, I've already lost them. Here. These are our house keys. And I can very safely say I do not think we would have purchased a house without your support. And I'm sure you hear that a lot, and maybe sometimes you think, oh, you would have just found another mortgage broker. But honestly, as a business owner, I had so much fear and overwhelm and uncertainty, and I was just so sure that we would never be able to buy a property, or at least wouldn't be able to buy a property with a mortgage. I was like, gosh, I'm just going to have to make hundreds of thousands of pounds cash, and that's the only way. And genuinely, from that first conversation with you, it just step by step made it feel doable. So thank you, because if it wasn't for you, I wouldn't have these keys. We wouldn't have bought our property. And thank you as well for agreeing to come on this podcast, because I feel like many people will probably relate to exactly how I felt about 6 months ago, feeling that overwhelm, feeling that uncertainty. As a start point, is that something you hear a lot from business owners, freelancers, entrepreneurs, people just thinking, I'm never going to be able to get a mortgage?
Of course. And in the early stages of buying your first home, so before you've actually bought your first home, you will be unsure, you will be scared, quite simply because you've never bought a home before. Adding to that, you may have a growing business. You don't necessarily have a fixed income to rely on. Maybe you don't know where your business is going to be over the next 1, 2 or 3 years. There's a lot to consider. It is daunting, but that's why it's important to work with an expert. What I like to do is try and make the process and the advice accessible, digestible, calm things down, and hopefully make the process enjoyable.
Yes, and you definitely do that. I think calm things down is a great way to put it, because I feel like, and to give people a bit of context on kind of our timeline, and when I say that's me and my partner, RSM, his nickname is so weird. People think that's his initials, by the way, and I'm like, no. Anyway, that's a whole story within itself. Red shirt man. We first thought about buying a house, or buying a flat, I should say. We live in London, so buying a house was never going to be the goal for us, at the end of last year. And then I think it was in the January that I'd put online like, okay, we want to buy a property. How? Like, I've got a business. Everyone's told me this is going to be really hard. And then you got in touch and then we had that first conversation. And actually, I don't know what timelines you look at, but in my perspective, it's actually been quite quick for us from like, we decided in January we wanted to buy. And then I think we must have got the keys about 5 months later. It didn't feel quick at the time, as I'm sure as well you hear from everyone. But making it feel calm and doable is exactly what I think having your expertise did. And almost I feel like every step of the way as we got closer and closer to completion, my anxiety just went down a little bit. And my trust in what you were saying, which was you can get a mortgage, started to increase. Is it harder as a business owner to get a mortgage?
So there's a little bit of a myth that with mortgage products, there are employed mortgage products and self-employed mortgage products. That's not the case.
Right.
We all have access to the same products, subject to meeting lending criteria.
And when you say products, that's like deals.
Deals. So
Okay.
interest rates, fees, monthly payments.
Yeah.
Okay. So we can all access the same deals, subject to meeting criteria. Lenders don't have, a list of self-employed products which are more expensive. That's
Right.
not the case. Okay. Now, as a self-employed business owner, of which is something you found, especially with a growing business, one of the early considerations is, should we buy now? Or if the business is growing, should we wait 1 year, 2 year?
Yes.
That's a consideration, but the hoop that we have to jump through as self-employed applicants, so I'm self-employed too, is how we provide evidence of our income.
Right.
So an employed applicant may need to just provide, 1 month's payslip, an employment contract, and they can use that income. With most mortgage lenders, not all, with most mortgage lenders, for a self-employed applicant, they may like to see 2 years. Some will consider 1 year, some need 3 years.
Yeah.
But it's a much longer period of time, and the reason for that is because lenders consider self-employed income to have less certainty, to be a little bit more unstable, rightly or wrongly. I don't make the rules.
That's a debate for another day.
Exactly. But yeah, it's how we provide evidence of income.
Okay.
This is the main difference.
I guess at the start, it was my fear being like, are they going to want to give me any money? How are they going to trust me? And I think as the kind of process continued, it turned into frustration of realizing absolutely I could borrow money. So I guess that's the first thing to say. Like, I am living proof, and many other people are, that you can get a mortgage as a business owner. But I definitely did notice and feel the difference in how they looked at my affordability versus my partner's. Like, I found it wild. It happened right before we got our mortgage offer, didn't it? That RSM's pay went up. He got a pay rise. And literally all he had to do was just be like, yeah, I've got a pay rise. Here's like one version of documents that says that, and they were like, cool, we'll give you loads more money. And then for me it's like, okay, we need to see this and that, and your accountant needs to send that, and you need to, and it's like, it really does feel like there's more hoops to jump through. And it does, I don't know, there's something in me that gets really riled up and wants to be like, stop thinking I'm a fraud, I can make money. But I guess that's part of what you've got to get on board with.
It is. It's definitely a lot more complex. We do need to provide more documentation as a self-employed applicant, but we're looking for an expert. We'll look for specialist lenders who are going to meet your needs, who are going to enable the dream to happen.
And the dream can happen. In terms of then how you prove affordability, obviously for people that are employed, it is kind of your salary, and obviously I know they also consider any debt that you've got and kind of what your monthly expenditure is. When it comes to judging that as a business, obviously there's so many ways that they could look at it. It's, I'm sure, different if you're a sole trader, you've got your profit. But what I found particularly complicated is, as a limited company director, for me, it was a question of, are they going to look at my salary, my dividends, my business profits, or somehow a combination of all three of those? Am I right in thinking it's not a clear-cut answer of they always look at this and you can kind of decide? Tell us, like, how do they actually judge how much you can borrow, i.e. how do they judge what you make? Because it's quite complicated.
So that's correct, yes. So I will come back to it. Sometimes it is possible to get a mortgage with 1 year's accounts, but we can maybe come back to that.
Okay.
But for now, we'll talk about the lenders, which is the majority of lenders who want to see 2 years accounts. Now, as a sole trader, you will need to show something called a tax calculation or a self-assessment, or SA 302, and a tax year overview. On that, it will state your profit from self-employment. Now, these lenders who want to see 2 years, if your latest year is higher, most lenders will use an average of your latest 2 years profit from self-employment. In some cases, we may be able to use the latest year. However, that's subject to meeting quite strict criteria.
Yeah.
So with most lenders, it's going to be an average of your latest 2 years if it's increasing. If your profit has gone down, lenders will look to use the lower figure.
That is harsh, isn't it?
Because it indicates to a lender that the business income is simply going downhill.
Yeah.
So a lender is cautious, and they will be
Understandable.
cautious in their approach. Now, with a limited company owner, we have those tax calculations. Those tax calculations for a limited company owner essentially show your personal income. So that will be salary and dividends. We also have company accounts, of which will show your company net profit. Now, some lenders will use your salary and dividends. Other lenders will use your salary and your share of the company net profit.
Okay, interesting. But they won't. They would never look at all three combined. Most of
They
the
will
time.
not add all three as part of the calculation.
Okay.
However, they may consider what your dividends look like. So if a lender is using salary and net profit, they may consider, have you taken out too many dividends or have you not? But it won't necessarily form part of the calculation. So some lenders are salary and dividends, other lenders are salary and net profit. So it's a job of somebody like myself to get all of this documentation in. So your tax calculations and your company accounts, look at the figures, review them, have a look at the market, see which lenders, what different lenders are looking to use, and then it's my job to see how I can make best use of your income. So what can we use to get the loan amount that you need and also access the best deal.
Interesting. Is that quite new that they will look at salary plus profits instead of just salary plus dividends? Because I feel like surely one of the frustrations a lot of business owners have is I could take more money out of the business, but I just haven't. And obviously the banks are going, well, we want to see proof that you've taken that money out. And the business owner's going, well, I've kept it in as profit because that's more strategic. Have they always been able to look at both?
So it's not new, but I would say more lenders will be using salary and dividends. There are fewer lenders using salary and net profit.
Sure.
Okay, so that may be why, if you maybe with your figures, if it's more suitable to use salary and net profit, using an advisor, and you just sort of it's a trial and error. You're contacting banks. You may get more no's. So yeah, it's not new, but I would say less lenders are using salary and net profit.
Do you hear that from people a lot who are looking to get a mortgage as a business owner, that kind of frustration of like, I could have paid my, if they want to see this much income, I could have done that, but actually I just haven't because for tax reasons or for the business growth, I've kept it in the company.
Exactly. So that is why it's important that you work with your accountant. When you're working with an accountant, you should always make your financial goals clear to them. Yes, we want to be tax efficient, but tell them if you're looking to buy a house.
Yeah.
Discuss with them, if I want to buy a house for this amount and I need a loan amount of this much, my mortgage advisors told me my income needs to look like this. You can then speak to your accountant and they can let you know whether that's possible. If it is, great. If it's not, you can then look to increase your income to make the figures work.
That's a great recommendation because you're right. I think our default is always tax efficiency. And probably a lot of accountants, unless you tell them, that will be their goal as well, right? Because often people hire an accountant because they want to pay less tax in a way that is obviously still completely above board. So that's a great point of as soon as you know that you might want to do that, let your accountant know. Because also if you're a limited company, you can right up until the day your accounts close change how many dividends you've declared and how you've paid yourself. So actually a lot of those things can be tweaked before you submit your kind of end of year.
Absolutely. As a mortgage advisor, we always have to be careful to say, we are not tax advisors. It's our job to let you know what your income should be to achieve your goal. Whether that's possible or not, that's a conversation you do need to have with your accountant. But that's why it's important to work with an accountant where maybe you can have that personal relationship with them. It's not just, a name over the phone, so that you can say, look, these are my goals. This is what's really important to me. Ask questions, if my income looks like this, how would that impact, the amount of tax that we're paying? Have that conversation with them, have really, fleshed out conversation, and also correspond with your mortgage advisor. Sometimes you can ask your mortgage advisor to work with your accountant so that everybody's on the same page and we're all working towards the same goal.
Yes, which you and Megan did, which was genuinely so helpful for me because kind of at points I think can feel like, especially in just the whole process of buying a house, you're surrounded by all these experts and they're all speaking in a different language and you're kind of just in the middle being like, guys, I don't really know what anyone's saying and what am I meant to say to them and how do I do that? And I remember it was when I just got an email off of you and an email off of Megan, my accountant, within like 5 minutes of each other, both just being like, hey, just spoke to the other party. You told Megan what she needed to present in the accounts. Megan checked that could happen and it was all good. And I was just like, oh, that is so helpful. So it really does, I think, make a difference when you're working with a mortgage advisor who understands business accounts, because also the complexity of kind of how they can be presented is, I'm sure, quite hard for people to get if they're not in that world.
Absolutely. And, sometimes an accountant may say something which absolutely isn't wrong. It's correct in the accountancy world. But for when applying for a mortgage, we may need, that may not allow us to apply successfully. So for an example, sometimes we'll come across if your dividends is higher than the company net profit. Now, an accountant may say that's absolutely fine, which it is, because there was profit left in the company. So that's absolutely fine.
They had a director's loan from the year before.
Yes, but with some lenders, in some cases, on some occasions, if that dividend figure is higher than the net profit, they'll not be happy, regardless of the wider context. Reason being, it looks like you're taking out more money from the company than you've earned that year. So that's why, conversations are important. Something I always offer to my home buyers is I'm happy just to speak to your accountant. As a home buyer, you've got enough on. There's so much jargon. There's so much different financial information. It can be overwhelming. Sometimes people will just say, Dan, can you just have a chat with the accountant? You understand it. They understand it. Then come back to me at the end with the resolution. And that's something I always try to do, just to save the home buyer a job.
Yeah, and just so then the two experts can talk in their expert jargon and understand what each other are saying, and it's cool, you guys have sorted that. So that's really clear. Kind of ideally 2 years of accounts, and great to know that there's different options of whether they look at, like you said, sole trade. It sounds fairly simple if they're just looking at that kind of tax return, whereas with limited companies it's that combination of salary and dividends or salary and profit. That first of all makes me think we should all be doing our bookkeeping and filing our tax returns ASAP, so that we can always have the most up-to-date and likely because of that the highest numbers to show. If, however, and this was actually true for me, wasn't it, you are looking to get a mortgage before your year end, we were kind of 3 at some points. Actually, I got my mortgage after my year end finished, and I remember there was conversation around, should we rush to get my accounts done so we can submit this newer tax return, which is going to be higher. And there was something that you did, wasn't there, with the mortgage company, the bank, also known as, around showing them what my current year of profit was looking like, but obviously not in a tax return, just being hey, it's kind of going well since that last return. Is that quite typical, or is that just something you can do if you need to show more proof?
So this is not all lenders, but some lenders will ask for a projection from your accountant of your upcoming year or the current year.
Yes, that was it.
And that is essentially a signed document from your accountant with the figures included, so potential salary, dividends, net profit, stating this is what we are expecting Alice to achieve this year. And that will be signed by the accountant, and the lender will consider that. Now, they won't or may not necessarily use those figures within the calculations again, but they just want to see that the future is looking bright for the business. Now, that may bring us nicely onto the potential of buying a property with 1 year's accounts. So that is possible. Okay, sometimes you may hear that you 100% need 2 years. That isn't always the case. Some lenders will do 1 year's. It's not going to be all lenders though. Okay, so with 1 year's accounts, you may not be able to access the whole of the market. Okay, you may not be able to access the cheapest deal or the highest loan amount. But some lenders will do 1 year. Lenders will, consider things such as your line of work. Is that industry booming? What is, again, a projection from your accountant for the next year? I actually did one recently it was a joint applicant. One of them was a business owner with 1 year's accounts. And he worked in, I don't want to be too specific, but he sold fish. Okay? He sold fish. He had 1 year's accounts. But he came to me and he essentially said, Dan, I've worked in this industry for 10 years. I've worked globally in all of these award-winning restaurants. I won these awards for the best fish chef of the year. And this was all genuine information that I then provided to the lender. And the lender allowed them to proceed with only 1 year's accounts at the time. So it is possible. That's quite an extreme scenario. But is it possible? It is in some cases. So that's, again, why you need to work with an expert who can sort of speak to the lenders and have those conversations.
And that touches on as well one of the things that I think I feared about getting a mortgage, and actually I was very soothed by how it ended up feeling, was worrying that these banks were just going to put everything through a calculator, and it was all this kind of AI system that basically just flashed red or green as to whether you're approved or not. And what I found really interesting, from obviously you were speaking with the banks directly, it wasn't us, which I can't even imagine how people do this, being that I wouldn't even know where to begin. I probably would have cried about 85 times. But from what you were saying, you were having conversations with real people and going hey, I think we had one point, didn't we, where they weren't happy with something on my partner's pay slip, and you're like, oh, I'm just going to have a chat with them to explain it, and then kind of not convince them, but explain why it's fine, and then get them to kind of change their mind, basically. And you did that, which was great. But I remember in that moment being oh, they're like real people you're speaking to. You're not just putting things in a calculator and then the answer is the answer. And I guess that example proves that as well. Like if there is a bit of nuance, it doesn't always mean that means it can't be done.
No, so it's not always black and white, especially with businesses. In your case, or in most cases, what I would do is I would speak to the BDM, or the business development manager at the bank.
Right.
That's essentially my contact. Where there's any criteria issues or where, you know, we don't agree on things, I'll have a real conversation with them. I'll put over my opinion and we will argue the case. So in your case, your partner's pay slips were quite complex. So not only was I dealing with a business owner, the pay slips were quite complex.
Really got our money's worth, Dan. You
Exactly.
worked hard.
Before I submitted your application, so this was for what was the cheapest deal on the market.
Yeah.
Before I submitted your application, the BDM told me that it didn't fit and it didn't work. Now, you know, I do this job every day. I like to think I know what I'm doing, and I disagreed. And I thought the BDM at the bank was actually wrong. So I had a conversation with you and James. I asked for your permission. I told you that the BDM had told me it wouldn't be accepted. I asked you permission to submit it. You said, Dan, go for it. We submitted it. Initially, the underwriter agreed with the BDM and actually declined it. And I was on the phone. I again put across my point of view, explained why, well, in the end, I was right, and they issued the mortgage offer. Now, if somebody applied by themselves, they won't have the confidence or the knowledge to do that.
You just think, oh yeah, they're right, I'm wrong.
Exactly. So that's why, you know, a mortgage advisor is having somebody in your corner who's on your team. It's a friendly face, it's an expert, a trusted authority, and that's what you're paying for. You know, for my home buyers, I work for them. You know, I don't work for the bank, I don't work for the estate agent, for the solicitor. I work for my home buyers, and it's my job to make sure, or it's my guarantee that whatever the best option is, that is what you will access.
Yeah, that makes total sense. I would have absolutely done what you've just shared there of like any moment where there was any like hesitation from them or something didn't happen, my first thing would just be like, okay, I'll give up. This isn't possible. That's what I thought. Because I think that's what for so long you are told, or whether you just kind of take it in from how people talk about it, is like, yeah, you can't get a mortgage as a business owner. Or my fear was like, we're probably going to be able to borrow, but we'll be able to borrow about like 50 quid. And I remember that first conversation we had with you where you were like, okay, here's the initial numbers of what you could borrow. And I was like, oh, okay. I could buy like a garage for that. Sick. Like maybe we can actually get something. And then obviously we could kind of make some changes from there. Are there any real kind of, not necessarily mistakes, but I guess things that business owners do that then when they come to maybe apply for a mortgage or go through that process, maybe make it harder for them? Like if someone is thinking, okay, maybe in the next couple of years I'd like to buy a property, aside from having that chat with their accountant and working out how to pay themselves, is there anything else that you'd recommend people kind of do that can help set them up for that in future?
So it all ultimately boils down to preparation. That's the big overarching message always, especially as a business owner, because lenders may look at 2 years accounts. We need to be prepared. We need to know, you know, if we are buying a home in 3 years, what does our income need to look like for the next 2-3 years to make that possible? So it's preparation. You know, a lot of the time people will get to that point of deciding, right, we want to buy a home. They are self-employed, and sometimes the income within their tax calculations or company accounts, it just doesn't work. And if that is the case, it's either we change the goal and we get a smaller property, perhaps, or we then make a plan to move forward on an informed basis where it's right, if I do want to buy that property, my salary needs to look like this, the dividends need to look like this, the net profit needs to look like this, and then you within your business can work towards that and hopefully, you know, achieve it.
Yeah, reverse engineer it, which actually is always what I recommend people do with their finances, because otherwise it feels so pie in the sky, doesn't it? Of like, I want to make this, or, you know, that's when you start getting silly with like, I want 6 figures, or and you just come up with these numbers for the sake of it. But actually reverse engineering, going, right, I need to make this to buy what I want, so let's go for it. With that in mind, I know sometimes people throw around these numbers of like, you can borrow 4 times your salary. And I feel like a lot of the time that's just talked about in the context of like people's salaried employed jobs. Is that like, are calculations like that relevant? And is there a number? Because that's, I think, what I was craving. I was like, can someone just tell me if I pay myself this much per year, times that by a number, and then that tells me how much I can borrow? Obviously, the main thing people need to do is work with someone like yourself to get an actual mortgage in principle and get the actual numbers. But is there like a calculation people can do to work that out roughly?
So every lender's affordability calculations are different. When I work this out, every lender will offer you a different amount. Now, it is true that most lenders will lend up to a maximum of 4.5 times your income.
Right.
Okay. Now, that does come down dependent on debts, children, credit history, all of that fun stuff.
Children? Are they considered debts?
They are.
No way.
So the reason being, well, it's quite simply because they cost money.
Yeah.
Having children is
Seems
expensive. So yeah, if you've got 10 children, you can borrow less money than if you've got no children.
Sure. What about pets? Do you care about
Pets
those?
are okay,
No.
unless you bought it with a loan.
Ah, true. Yeah, because that that's probably an important clarification to make as well, isn't it? Like, it's easy to just be talking about the big numbers of like how much you're paying yourself or what's your salary, but also they take into consideration any debt that you've got, also what your monthly expenses are. So I guess that's something for people to consider as well, is like you might actually be able to borrow what you want, not by making more, but by paying off some debt or spending less.
Absolutely. So a lot of the time people will go online and just type in mortgage calculator, put their income in. That will just give you 4.5 times with a link to a mortgage brokerage, because that's how they get referrals, because it's a nice round figure that sounds big and that's great. Let's go via this link. Because there are some lenders that will go to 5.5 times, again subject to meeting strict criteria. It is possible, but income, debts, children, credit history, how long you can take a mortgage over. Can you take a mortgage for 40 years or for 10 years? That makes a difference. Some lenders will lend more on a 5-year fix in comparison to a 2-year fix. So it's very complex, and every lender, it's going to be different with every lender. So just if one lender says no, that doesn't mean it's not going to happen. The lender next door might give you the amount that you need. And
there's so many kind of levers that you can pull on, isn't there? Because I think the other thing that I had to keep reminding myself is like, yes, my business might mean that it's a little bit more complicated, or just there's more kind of things that I need to provide as proof. But actually also, because I've got a business, I've got the ability to up our deposit more comfortably than maybe I would have. My partner can't necessarily he can't say to his company, hey, can I have £5,000 this month? And we're like, no. Whereas like technically with a business, you have the autonomy to pull that kind of money out, obviously, if you have those reserves there. And I think that was just something I didn't get. Like you said, all these websites just make it seem so cookie cutter. Like, okay, how much do you make? Times it by 4.5, there you go. And actually there's a lot more to it than that. But that doesn't necessarily mean actually it's harder. Often that means that you can kind of control more.
Exactly. Yeah. So that can be the case. As long as you are working, as long as you have you can evidence your income, and you are working with an expert who works with the whole of the market and can explore all options for you.
Yeah.
The way we like to look at it is that you're not really any worse off than an employed applicant. It's just about knowing where to place yourself.
And do you often see then that number, if it's typically like 4.5 times for like an employed income, do you notice that? Like, is there a figure of roughly what that number goes to if someone's self-employed?
So it's the 4.5 times. It's very similar whether you're employed or self-employed. It works in the same way. But yes, if somebody has no children, no debt, no bad credit history, typically when I put it into the calculator, most lenders will come out with, it's quite often 4.49. But that is the specific amount that most lenders will go to. Okay. But it's not too dissimilar between employed and self-employed in that way.
Does it then also, this is a bit of a niche question, but I'm just thinking, I know of a lot of people, and I did this myself, who begin as sole traders and then they transition to limited companies, often for tax and VAT efficiency. Because obviously to the government and to everyone else, those are completely separate companies. If someone's maybe thinking about, maybe they're currently a sole trade and they think one day I'll turn this into a limited company. If they're thinking about buying a house, I'm guessing is the recommendation to like stay as you are until you've bought the house, because otherwise you're technically starting your accounts from zero. Is that something you've seen before?
That's something we see a lot.
Okay.
It's not necessarily an issue. There are lenders happy with, a sole trader business becoming incorporated. You still have 2 years self-assessments showing either profit from self-employment or salary and dividends.
Yeah.
So, there are lenders that will consider that. It's something, we have done and we can do. So, yeah, if you are looking to buy a home, that's not necessarily going to stop you achieving it.
I feel like so many of your answers, Dan, are just being like, yeah, no probs, it's doable. It just, there's more steps involved, I guess, is the main.
More hoops to jump through, but it can be done, as you found out. I'm a business owner. I own a house now. So, yeah, it definitely can be done.
And does any of this conversation change once someone's bought their first property and maybe they're looking to get their next mortgage, or maybe they're looking to remortgage? Like, I know of one of my freelancers that I work with has a mortgage which they got as an employed person, and now they're in a situation where their interest rate is up for, I don't really know any of the right words, they're negotiating a new mortgage deal, maybe that's the right thing to say, and actually they're finding that is harder because the more that the lenders now like, well, you've got a very different financial situation. Do you notice that comes up?
So let's say somebody's employed on a £50,000 salary. That's a nice round number. And then next week they leave that job to start a business. They have no year's accounts. If that mortgage is up for renewal, the mortgage lender will look at them as a self-employed applicant with no year's accounts. If that's the case, you're not going to be able to successfully apply to a new lender. So what you may do in that case, if you're looking to remortgage, is you may look to switch with your current lender. So your current lender, as long as there's been no sort of mispayments on your mortgage and there's no credit issues, typically will allow you to complete something called a rate switch with them, which essentially means that you just switch from your current fixed deal to a new 2 or 5 year fix. It may include a credit check at most Most lenders don't, but it's a very straightforward process. There's no real paperwork needed. You don't need to evidence your income. So that in that scenario, that's something that we do quite a lot, and it's often most suitable if you are looking to stay in the same house with the same loan.
That's good to know. I mean, it sounds like a lot of this does come down to preparation, and actually makes me feel very grateful that we were okay, because we definitely didn't prepare very long term. Like literally the moment we made the decision to buy was probably about 20 minutes before we first sent you an email. And at that point, like, you know, my previous accounts couldn't be changed. They were what they were. And so actually now I'm like, oh gosh, how lucky that it was all looking all right. But I know like our affordability was really tight, wasn't it? And like, I'm fine saying that publicly, because I think it is also worth acknowledging. Like, yes, it's hard, but you can still, like, we got exactly what we were, like, the maximum we were dreaming of spending. But you do have to like work out all those little levers you can pull to get there.
Yeah, absolutely. So in some cases, you know, in terms of accessing the maximum loan amount that you could potentially achieve, that's not always a great idea for everybody, because that can be expensive. Can you afford the associated monthly mortgage payments?
Yeah.
However, in some cases, such as your own, with a growing business, I was happy looking at your figures and income, etc., that if you were borrowing more over the next 1 or 2 years, that should become more and more affordable. So it's about, you know, you should be cautious, but yeah, with advice and those conversations, you know, you can then make an informed decision whether you do want to borrow the maximum amount or whether you want to borrow a little bit less. In your case, our conversation was, we are approaching the new tax year. You will have new documents over the next few months, but you had found a property. So my job was to let you know what could be achieved right now. And then that was your decision to make. Do we want to buy now, or do we want to wait another 6 months, a year? And you did decide to buy. Yeah,
that was exactly it. And I remember us as we approached April, because that's when my tax year switches round, that was when we found the property that we've now purchased. And as you'll know, Dan, because we dragged you along the journey with us, there was a property before that, and then there was another one in the middle. It was a crazy couple of weeks. But yeah, we did have that mindset of like, if we don't get this one, we'll submit my new tax return, then be able to borrow more, and then we'll kind of maybe look at different things. And I guess that's part of almost like the benefit of doing it as a self-employed person is, you know, for people who are typically employed, you don't really have much control over how and when you get a pay rise, or you don't necessarily have a view of when that might happen. Whereas to know like, okay, if we submit my next accounts, we're probably going to be able to borrow this. It's quite cool to be able to like actually have that bit of control, and I guess know what your options would be if you did it in future.
Exactly. And nobody knows your business better than you do. You know, if you know that you are a part of a growing business and you are anticipating earning X amount over the next, 1, 2 or 3 years, that can give you some confidence to, right, we can move now. Whereas with an employed applicant, you're not often getting a 10 grand pay rise, unfortunately.
Do you find, and maybe you've had, and maybe you're more mature than me, so you don't do this, and or you've just learned to have to like swallow it, but are there moments in your job where you just want to like shake someone and be like, stop not trusting business owners, they are technically more secure than everyone else? And I mean, obviously that is opinion that I've just said there, but I always think that, like, it blows my mind how easily employed income is trusted, when technically my partner could get fired today, and in, how long is his notice period? I don't know, like 3 months or something. In 3 months' time, he'd have 0 income. If my business were to stop today, I've got enough savings, I've got enough income plan to come in. Like, I really wholeheartedly believe that as a business owner, I have so much more security and autonomy over my income than an employed person does. And it really grinds my gears that mortgage advisors, anyone in, credit card companies, whatever, don't trust that as much. I guess I can totally see why they wouldn't. But do you find that you get frustrated at that, or are you more mature than me?
I do get frustrated. So I've just moved house myself this year. I had the same problem. I started my business around about COVID times, and it's a growing business. The lenders, in my case, needed to look at the latest 2 years, and I maybe couldn't borrow the amount that I wanted because they were looking at the latest 2 years.
Right.
And that, those accounts from 2 years ago were a lot lower than what they are now. And although I can see, the money coming in, lenders simply did not care. And just because I am a mortgage advisor, I don't get any extra help.
You're like, come on, guys, we know each other.
Exactly, no extra help. So yes, absolutely. Again, it's because you know your business better than anybody else. In some ways, it isn't a bad thing that lenders are cautious. It not only protects them, it does protect you. Although it is frustrating. Pros and cons.
That's a very mature way of looking at it. How was it? Like, was that your first time going through the mortgage process with a business? When you did it before, were you more traditionally employed?
No. So this is my second home. When I bought my first home, I worked, well, essentially it's the same business, but I worked in a different sector of finance for many years, earned a certain salary. I then switched and pivoted into mortgage advice. Initially, that income dropped. I started in COVID. It was quite a hard time to get placed in the industry. So those sort of, 2020, 2021 were quite low years for me. It was the second time, quite a different picture both times.
Yeah.
But yeah, it's the same process.
Comforting to know you didn't get preferential treatment though.
No, never.
It's the same process for everyone.
No friends in mortgages apparently.
Did you find though because I guess that was your first time going through it, like with your day job being helping people with the mortgage process? I can imagine it was not that you probably ever forget what it's like because you walk people through it all the time, but it must have been interesting doing it yourself.
It's quite nice because I can sit down for an hour, let's say, and I can say to my partner, this is how much we can borrow.
That's
and
true.
She can't argue with me about it. Because hopefully I'm right.
Imagine if she went and hired a mortgage advisor.
Exactly, yes. Yeah, got us more money. So we can sit down and it's quite black and white. It's quite a black and white experience for us. We can borrow this amount. So are we moving forward or not? So it can make the process a lot less stressful.
I remember when you said, I think we had a call with you and you were like, yeah, moving house like tomorrow. And then like 2 weeks later, you're like, yeah, having a baby tomorrow. And I was like, Dan, you're doing it all.
Yeah, it's been a hectic year. Yes, we did move house and then had a baby 2 weeks later. I believe. Well, it's because our house purchase, the legal side of things, unfortunately can be how long's a piece of string. There's so many variables involved with it. And our house purchase took a lot longer than we were hoping for or that we planned for. And then all of a sudden it was right. We're getting the keys. We're living out of boxes. And there's a baby coming. Couple of weeks of stress, definitely. But things are a lot calmer now. A little bit more sleep. So
that's good.
We're doing okay.
I mean, I thought I was chaos with a book launch and a new home, but I feel a baby is on a whole nother level to that. So that is very impressive.
The book launch looked busy. So yeah, no, I understand.
It's impressive we both made it here today. We've done well. But it's funny you say that because I definitely reflected on that after we bought our flat. I thought going into it the hardest part was going to be getting the mortgage, and actually in hindsight that was probably the simplest part. Like even though we did, and it's one of those things where I think you kind of forget what something was like until you start to reflect on it. Like we had a couple of moments where we had to like check stuff with pay slips or like provide more accounts, but actually like a lot of that was really simple. I remember it was maybe like an hour of sitting down and making a Google Drive folder with like every tax return I've ever done ever and all the bank statements or whatever. And then that was kind of it. Like obviously there was then back and forth of picking the right deal for us and interest rates and whatever else. But I definitely, upon reflection, thought that would be the hard bit. And then actually the hardest bit is, as you said there, the legal side and all the other logistics. Yeah, I think I just didn't expect that to be the bit that really causes the stress.
For me, and I don't know if you would agree with this, but whenever I choose a solicitor or a mortgage advisor, it's important to me that they communicate well, that they are responsive. They're not, sometimes solicitors can be stuck in the Stone Age, as you may find. It's important to me that they answer telephone calls, they respond to emails the same day. And that's a little bit of advice that I would give. Sometimes when you choose a solicitor, they're not very responsive. They do talk in jargon, and that can add stress, and it's not really what you want. So choose well. Don't be scared to ask questions. If I do choose to work with you, how long will it take you to respond? How do you communicate? Is it only email? Do you answer telephone calls? Do you use WhatsApp? Don't be scared to ask these questions to make sure you're working with people who are going to make your home buying process as enjoyable and as stress-free as possible.
Yeah, and it really does make a difference. We had brilliant solicitors, and then we had you with a little WhatsApp group, and there were moments where I'd be like, we really need to stop sending down these questions, like this poor man. But you were just brilliant, like answering every question. You were on the other end of the phone when we had the drama with the first property that we lost, like helping us to navigate that. And like it really does make a difference, I think, having people with you that, like you said, are not just the experts but also communicate. I don't know, like as the buyers, it's a really weird process. You're spending so much money but you feel really unaware of what's going on, and so just having people that can be like, this is where you are and this is what's happening, I think just brings so much comfort.
Yeah, so when you choose a mortgage advisor, sometimes if you work with the large brokerages who are maybe call centre based, every time you call, you may speak to a different person. You may take, their emails may state, we take 48 hours to respond is a big one. Decide if that's what you want or not. And when you're choosing an advisor, choose somebody who you like, who you're going to be comfortable speaking to about your finances over the next months, next few months or years,
Yeah.
and also who you trust. Pick somebody who works for you. That may be the man in the suit in the, in the big city. It may be somebody who you find on Instagram, as you did with myself.
Yeah.
There's no right or wrong answer. It's just about choosing who's right for you, who you want to hold your hand, to make it as enjoyable as you can.
Yeah. I mean, I will confidently say, and I can say this because it's not you saying about yourself, 99% of people listening, I would say you are probably the right answer for them, because you get business owners, you speak in a language they understand, and like, I really, really do mean it when I say like, I don't think would have purchased a property without your help. Does it feel cool that like all these people own homes and like you've played a role in that?
To be honest, yes, it is quite cool.
You should
It's
make
quite
a map
nice,
of it.
That might be a good idea.
Yeah.
That might actually be a good idea.
That'd be good content as well if you had like a map of the UK and then pins of everywhere that you've helped buy a property, and then you can be like, guys, I haven't helped anyone in this postcode yet. Do you want to be
Alice?
a client?
I'm pretty confident I will be doing that.
Perfect.
That's a good idea.
Perfect.
But yes, it definitely is. I had a review the other day. I actually posted on LinkedIn that I think it was my favorite ever review. And it was like, oh, thank you for what you've done for me and my family. And I was like, oh, how nice is that?
Yeah.
Sometimes I am sat at the desk when I get if sometimes a mortgage application, it will, even though my, the record this year is 100% accepts for applications that have been submitted, sometimes it does still feel a touch and go. And sometimes I do still get a little bit nervous about it. And sometimes I'll get that email through, mortgage offer granted, and I'll find myself, at my desk in the house celebrating, and I'll be like, come on. And so I think that's a good sign that, the job, it does genuinely provide some pleasure, because you are helping to people to achieve dreams, and I enjoy it.
Yeah. Oh, I love that. I mean, I don't know how you cope with that anxiety of dealing with, like, the thought of like negotiating and proving to people like, it's not for me. So I'm glad people like you exist. And I can honestly say to anyone listening, especially I think if you're a business owner, but even if I wasn't, I would recommend to people to work with someone like yourself or you, because you're great, as a mortgage advisor. And I think before the process, I didn't really get what that person would do. I was like, oh, it's just like a middleman. Whereas actually I can confidently say on the other side of this process, I have no clue what you did. And I mean that in a positive way of like, I don't know any of those things. So I didn't know what they were. And the thought of like, I don't know, I guess in my parents' day and age, what they would have done is like, they just went to Nationwide and went, okay, we've been with you for how many years? Can we have your mortgage offer? And actually having worked with you, and you then came back to us and said, hey, I've spoken to everyone. Here's all your best options. I'm like, gosh, if we hadn't have worked with an advisor, we probably wouldn't have got the best deal for us. And I just can't imagine the workload involved in trying to shop around and find all the best options yourself.
Yeah, so a mortgage advisor will do all of that legwork. I spend a lot of time on hold to banks. I spend a lot of time on live chats. I spend a lot of time disagreeing with banks. And if you were to do that by yourself, especially as a business owner where it's more complex, you're at work and you're looking after the kids and you've got hobbies and you want to have a nice life, you want to watch Netflix, it can be a lot of time spent on the phone getting frustrated. So if you are working with an advisor, and if you are paying an advisor, you're not only paying for the end result, you're paying for the time saved, the stress reduced. Yeah, so in my opinion, it's well worth it.
I genuinely just don't get how people do it without one, but there you go. As we round this conversation off, is there anything else we haven't covered where you're thinking, okay, if a business owner is listening to this, they want to buy property and they're perhaps feeling, oh, I have a question actually. I've just thought of another question I wanted to ask. Do people chat to you about buying a property through their business? Is that something that like whizzed through my mind for about 0.2 seconds? And then I was like, oh, don't think that's relevant for me. Is that an option for people, or is that not relevant?
So not necessarily for a residential mortgage.
Okay.
So for a house that you are going to live in, that would be extremely difficult. However, if you are buying a property for the business, or if you are buying a letting property, you may set up a company, it would be called a special purpose vehicle, a company set up for the purpose of buying or letting property. You can then own properties through a company.
Interesting. I feel like that's what a lot of the like buy to let TikTokers tell you to do, don't they? To like get rich. You just start a limited company and then buy a property, and they make it sound so simple. Yeah,
so the benefit of owning properties via a company, essentially there can be tax benefits. But that depends on how many properties you own. It depends on your income, how many properties you own. There's a lot to it. It's a conversation to have with an accountant. But yes, you can do it in that manner.
Interesting. Okay. So that was the only other question in my head. Is there anything else people listening, FAQs or things that we haven't covered that are maybe relevant or important around what it's like to buy a property as a business owner?
I would say, as you've mentioned TikTok, is to be careful of the information that you are consuming. There is a lot of good online. You know, my business is sort of founded online on Instagram. That's how I met yourself. That's how I meet all of my clients through podcasting, Instagram, etc. But on TikTok, there is a lot of rubbish. There's a lot of sort of sensationalized information. There's a lot of, I'm not sure what the word is, but you know, where there's a caption which is there to scare people. There's a lot of that. So, you know, it is 30 seconds of information a lot of the time. Be careful of what you are consuming and what you're trusting. Speak with an expert, and that will certainly help.
Yeah. I guess the advice off the back of this is like, wherever you're at on the journey, even if you just maybe thinking you might want to do it, it's probably never too early to speak to an expert like yourself and just get an understanding of the numbers. Actually, I'm just remembering now, I had a call with a mortgage advisor back in 2021, and I just met RSM, so obviously it was not thinking I would buy a property with him. Didn't think we'd stay together at that point, probably. So I think I was chatting to someone about buying a property myself, and I remember that chat didn't end with me obviously getting a mortgage, partly because the clarity I got from that first step was you can borrow a very, very small amount, or for where I live, it's not an amount that would get me a property. And actually, although that technically, I guess, didn't move me forwards in terms of buying anything, it was so helpful to have that conversation because I think it planted the seed for me of like, okay, if I want to buy property, something's going to need to change. And thankfully, what changed was I had someone else to buy 50% of it with me, and the business grew. So would that be your advice to people? Like, if at any point you're thinking it might be in your plans, it's probably worth having a conversation with someone.
Yes, it's never too early to just lay some foundations, understand where you're at, understand if it's not possible. There's value in that too. And then you can start to forge the path ahead, whether that's over 1 year or 10 years.
Because it is possible. It just might be that you need to change some things to
Exactly.
make it possible. That was definitely my conclusion from that first call.
You can move forward on an informed basis, of which is the overall point, I suppose.
Yeah, love that. Amazing. Anything else? I feel like we've covered so much of it. And
no, I feel like we've covered a lot. The advice process for a business owner: speak to somebody early, get that clarity, and then if you want to make it happen, I'm sure you can.
Yeah. Contact Dan, that's your next step. And I will say, for anyone, and I don't know if you felt this way, Dan, when you kind of recently bought your property that you're in now, I have never felt so appreciative of my business since buying a house using that income. There was something really validating for me of being like, oh my gosh, this absolute building site of a flat that I currently live in, which is crumbling and a little bit damp and smells a bit in a few rooms, I did this, or at least I did 50% of this. And I feel, I don't know if you hear that from people a lot, but like there's something about realizing, oh wow, I've built a business, I've built a career that can buy a property. Like that is just, I think, such a cool moment to have.
Absolutely. So I had that in a massive way. So the house that I've just bought was actually my grandparents' house. And I said since a child that I was always going to buy that house.
Really?
And then my gran passed away in August. And we found out at the same weekend that we're going to have a baby. And it was like, right, here we are. If we're buying it, we're buying it now. And, you know, with my business, you know, I never had a history in mortgage advice for 20 years. All of my clients have been generated by myself via, online, Instagram, podcasting. And yeah, it was a moment where you sit down and you think, wow, my business that I ran a lot from a desk in the house has allowed us to achieve this, and here we are. Because, you know, as with any business owner, there are points or there are days where you think about wrapping it in. But yes, 100%, I had that feeling.
And it must be so fun in your job to witness that for so many different people.
Exactly, yes, every week.
Oh, I love that. Well, I can't wait to see your pin board, and I hope we are your first pin on the board in southeast London of our new flat. And also, I'll leave all of the links in the show notes for people to come and not just find your content, but obviously inquire about working with you if that is something that they're interested in doing. Not to commit to it publicly, but I will. You are also, I think, starting a podcast.
Yes, so I am currently working through the podcast course by Alice Benham.
Highly recommend.
It's something I've considered and had the idea for quite a while. I needed a little bit of nudge and know-how. Something I would never do is write it down, which I've done via the course. So hopefully at some point this year, the idea being that it would prepare people for buying their first home, not only financial information, because, you know, let's face it, that can get dull at times. Mortgages, deposits, the home buying journey, also perhaps, you know, expert guests talking through basic DIY. You know, there's gardening for people like me who can't do it, buying with a partner, all of that sort of stuff. So yeah, we'll see. We'll see what happens with that.
Nice. So when this episode comes out, maybe the podcast will be out, or maybe they'll need to follow you and wait and see. But there is a lot more content from you that they can come and find.
Absolutely. So there's a lot of content on Instagram of which will hopefully be useful. And yeah, hopefully with the podcast, that will be very useful for people. But no, we don't have a date yet.
But it will happen. You've said
Yes.
it now, so people are going to be ready and waiting. Amazing. Well, thank you so much. This has been so valuable, and I just know this is one of the episodes we'll have where we'll keep seeing downloads, you know, weeks and months and years after it comes out, because I can't believe in 300 episodes we haven't talked about buying a house as a business owner, and probably part of that is because I thought it wasn't possible. So there we go. It is possible, and people should work with you. That's my final words.
Well, thank you very much for that and for having me. It's been a pleasure. And yeah, hopefully it does help more people to buy a home.